Good morning, all of you. Uh, Today we will talk about the capital and revenue, the difference between capital and revenue. Capital can be capital receipt and capital expenditure, and revenue also can be revenue receipt and revenue expenditure. Okay, so we are going to talk about capital and revenue. Yesterday, I was not able to get answer for a question related to this because that was a question crept in. So therefore, I just wanted to cover this topic, and yeah, this may carry an internal question may come in. Okay, and there may be one short theory question or maybe one essay theory question for the main examination, end term examination, end of the semester examination. Okay, the capital transactions. The concept of capital and revenue are fundamental to the definition of the accounting profit. There's accounting profit, there's economic profit. When it is economic profit, when it is economic profit, it is a reward for management, managing the affairs of the business. But when you look at the accounting profit, it's a difference between the income and the expenditure. Rather, it is the excess of income over the expenses. Okay. And this concept of differentiating between capital and revenue is fundamental, is core to the concept of determining accounting profit. Okay, right. So let's look at capital transactions. Capital transactions have long-term effect and they are long-term transactions. They are transactions which have implications for a longer period, okay, in the long run. While the revenue transactions have short-term effects and they are uh, yeah, they are revenue transactions. Short-term implications have the revenue transactions have short-term implications, and the capital transactions have long-term implications. The capital expenditure, when you look at the definition, how do you define? It is incurred on purchase of asset, alteration of an asset, or improvement of an asset. Whatever expenditure you're incurring for the purchase of asset, for the alteration of asset, for the improvement of asset. Some time back, I have seen one fellow in Gujarat. He has taken two Tata Safari cars, and he was a mechanic, automobile mechanic by profession. Right, what he did was he has joined these two vehicles and made his own Lamborghini. Not Lamborghini. What is that? That lengthy car. What is that? Not Lamborghini. What is that? Yeah, that lengthy car.
Limousine.
Huh? Limousine. Yeah, limousine. Okay. So thank you. So he made that car. Look at this. He made an alteration to the asset. And if you say, what is the worth of the asset? It is the total cost. It was two old cars procured and made a bigger car. It's an alteration, right? So sometimes you may use some equipment to give the mileage to the vehicles. That's improving, quality of fixed asset, right? So these are all, you can also see in this example, the purchase of car to be used to deliver goods. You have taken the car, let's say, you have taken the Endeavor or what is this, Fortuner, and only two seats you retain. The remaining space you will make it for transporting the goods items. Okay, so that's an alteration. That's an alteration. So the cost that you incur to alter that also is capital expenditure. The amount spent for purchase, alteration, and improvement of the fixed asset is capital expenditure in one sentence. Like delivery of fixed assets, installation of fixed assets, improvement of fixed assets, legal costs of buying the property, demolition costs, architect's fee, all these are capital expenditure. They're all part of the capital expenditure. Okay, let's come to revenue expenditure. Revenue expenditure is that expenditure which is incurred in the running of business. The amount spent for day-to-day operations is revenue expenditure. The purchase of car may be capital expenditure. The purchase of, fuel for running the car is revenue expenditure. Okay, or you may buy a machine whose cost is capital expenditure. To run the machine, you may use the electricity. Okay, the electricity bill, the power bill is running cost. That's a revenue expenditure. Or the grease that you use or the lubricants that you may use, okay, to run the machine is revenue expenditure. Okay, now let's look at the types of revenue expenditure. Maintenance of fixed assets, administration expenses, selling and distribution expenses, maintenance of fixed assets, administration of the business, selling and distribution expenses. All these are, now the definition is within 12 months if you're incurring, they are revenue in nature. Okay, now we'll come to the features, okay, below, how to determine. Now, at times, it may be revenue, but you will convert it to capital. That's capitalized revenue expenditure. My master's program was, the first semester system, the first batch of the semester system. And the students in the campus, they were agitating and said, we don't want semester system, we want annual system only. And there were so many Rastarokos and all that. Finally, they made it into again annual system. So my batch was annualized semester system. It was annual and they made it into semesters. And again, these semesters are clubbed together and made it again annual. So our syllabus was annualized semester system, typical syllabus, right? Sometimes the expense that you may incur may be revenue in nature as per all the conditions. But what happens is, because of the conditions, given conditions, you may have to analyze. Look at this. Expenditure connected with the purchase of fixed assets are called capitalized expenditure. Wage is a revenue expenditure, but wage paid for what? For installation of the machinery. Wage paid for the installation of the machinery. Okay, so that's part of the cost of the machine, all the installation. look at this. When you pay some money to unload to the laborers, uh, you know, when you look at the terms and conditions, that should fall in the category of revenue, but that is not revenue, right? It is into uh, the cost of the fixed assets. So this is revenue, which is capitalized. It is revenue, but it is capitalized. This is capitalized revenue expenditure or capitalized expenditure. Let us look into the rules for determining the capital and revenue. Please stop me, don't hesitate to stop me if you're held up somewhere, okay? Don't hesitate to stop me from speaking, okay? I will stop for you and clarify your doubt and then proceed further. Rules for determining capital and revenue. Nature of business is number one. Let's say if you are a dealer of furniture and purchase of furniture is a revenue expenditure for you, the tables, the chairs, the cabinets, okay, the cubes, they're all material for you, they're all goods in trade, right? Purchase of such items for you, a furniture dealer, is a revenue expenditure. It is just a purchase of goods for you, right? And look at this. The revenue items appear in the profit and loss account only, while the capital items appear in the balance sheet. So when you purchase the furniture, wherein you're dealing with the furniture business or furniture, then you cannot enter that in the balance sheet. For you, it is not an asset. So therefore, you cannot enter into the list of the assets, right? So therefore, the nature of business is very important criteria for separating the expenditure between the capital and revenue. And for me, I'm an educational institution, and for me, if I'm buying tables and chairs, that's an asset for me. I will use it for a longer period, 10 years, 20 years. That's an asset for me. Okay? So, nature of business is one point which segregates items into revenue and capital. Number two, B, recurring nature of expenditure. Sometimes if the frequency is too often in an accounting year, then you can call that expenditure, that type of expenditure, as revenue expenditure. Okay. And if it is non-recurring, once in a while, if you come across such an item, then that is capital expenditure. For example, monthly salary of the staff or the rent paid for the accommodation you're using, okay, they're all routine. Electricity bill, they're all routine, right? Recurring in nature, they're all revenue expenditure. And they enter only profit and loss account, enter in profit and loss account, not the balance sheet. While the purchase of asset is not a transaction occurring very often, okay? You don't buy the assets every year, okay? Or even if you are going for the expansion, you don't expand every year, okay? I don't think any business organization is so successful that they go on expanding every year. Maybe the expansion plan may be for once in 5 years, once in 10 years. Okay, so therefore, the purchase of asset is not regular. Then it is classified as capital expenditure. The third one, and C, is purpose of expenses. Expenses for repairs of machine may be occurred in the course of normal maintenance of the asset, such expenses are revenue in nature, but in the other hand, if the expenses incurred for major repair of the asset so as to increase its productive capacity, it is capital expenditure. Just for regular maintenance, if you are incurring, that is revenue expenditure. Okay, but if you're incurring it for, if you're incurring it, let's say the total performance of the asset is going to be changed, and the amount that you're spending also is just not normal, but it is going to be very high. Let's say for regular maintenance, regular repairs, you may incur 2,000 to 2,500. But if you're incurring substantial portion, let's say 20,000, 30,000, okay, which is just nearer to the value of the asset, okay, or away from the regular value of the revenue expenses or repairs, then that is a fixed asset. Okay, that's part of the fixed asset. That's capitalized. That has to be capitalized. Okay, that has to be capitalized. Now here, there's a bit confusion in this case. Okay, you have to be very careful while deciding whether it is capital or revenue. Next, effect on revenue generating capacity of business. The expenses which help to generate income or revenue in the current period or revenue in nature and should be matched against the revenues earned in the current period. Okay, there's a matching concept which I'm going to talk to you, okay, in the coming sessions. So the current year's expenses should be matched against the current year's revenue. On the other hand, if the expenditure helps to generate revenue over more than one accounting period, then it is a capital expenditure. If there's some expense that you cannot match against this year's revenue, then it is having long-term effect or implication. Then it is a long-term commitment or long-term expenditure or capital expenditure. Look at this. When expenditures on improvements and repairs of a fixed asset is done, it has to be charged to profit and loss account if the expected future benefits from fixed assets do not change. And it will be included in the book value of the asset where the expected future benefits from assets increase. Last one is materiality of the amount involved. E, relative proportion of the amount involved is another important consideration in distinction between revenue and capital. Materiality. Okay, what is materiality? Materiality. It contributes to the revenue earning capacity of the business. You know, if you think an expenditure is going to contribute to the revenue earning capacity of the business over more than one accounting period, then you call it a capital expenditure. But if that is less than 1 year, then it is revenue expenditure. If the revenue earning capacity is for more than 1 year, it's a capital expenditure. If the revenue earning capacity is for less than 1 year, then it is a revenue expenditure. Okay, right. Now let me conclude here. By saying all the revenue items appear in profit and loss account. All the revenue items appear in profit and loss account. The revenue expenses appear in the profit and loss account debit side, and the revenue items or revenue incomes or revenue receipts appear on the credit side of the profit and loss account. The excess of revenue receipts over the revenue expenditure is profit. is profit. I told you what is gross profit? The sales minus cost of goods sold gives you gross profit. And similarly, what is net profit or net margin? The gross profit minus selling and administrative expenses gives you net margin or net profit. Okay, what is that you're doing? You're trying to match here, whether it is in the calculation of gross profit or in the calculation of net profit, you're trying to match the revenue receipts or revenue expenses against the revenue receipts. Thereby, you're getting profit or loss, right? What is the purpose of preparing profit and loss account? It is to identify, or it is to determine whether the company or the firm is making profit or loss. Profit or loss. So all the revenue items enter into profit and loss account. Let's conclude all the revenue expenses on the debit side of the profit and loss account and all the revenue receipts on the credit side of the profit and loss account, thereby determine the profit or loss. That's the conclusion about revenue. Let's come to the capital. Let's come to the capital. All the capital items enter into the balance sheet. The capital receipts enter into the liabilities list, the left side. All the capital expenditure enter into the list of assets on the balance sheet. Okay, balance sheet. Right? So the assets on the balance sheet, okay, the liabilities on the balance sheet. All the long-term liabilities, capital receipts, all the long-term assets, capital payments, capital commitments, or capital expenditure. Okay, so in addition to this, you also, yes.
Sir, the next got disconnected.
Yes.
Sir, the next got disconnected, sir, because of power.
I'm not able to hear you. Apish, I'm not able to hear you. Can you set your mic and speak properly?
Sir, now you are able to hear me?
Now?
Are you able to hear me now, sir?
Yes.
Sir, the next got disconnected by mistake, sir. Can you, he's waiting.
No, it is not proper. I could not hear you. All right. Can you write in the message box? Okay. Can you write in the message box? I'll read it and then discuss. Write in the message box. Okay. So I'll come back to you, Kapish, after reading your message. Right. So in addition to this capital receipt and capital payments, you also have working capital. Okay. Working capital, where there is short-term obligations list and there is short-term assets list. Short-term obligations on the liability side, short-term assets on the asset side. Okay, so the assets and liabilities list is what we call balance sheet. Okay, the position statement. Right. So we'll.
Sir, can you check the chat box?
Yeah, I'm just checking. I didn't get any message. I got it now. Yeah. Okay. Ganesh is waiting. I thought you were asking a doubt. Okay. Right. Look into these. Statements and find out whether those statements are true or false. Find these statements whether they're true or false. Overall expenses of second-hand machinery purchased or revenue
Sir, overall spelling is wrong, sir.
Wrong, eh? What is,
Yeah, overall, yeah.
can you tell me?
ALL, sir.
ALL,
Apostrophe
sir.
U.
Oh, yeah, tell me spelling.
OVERALL.
ERALL.
ALL.
This is overall.
Yes, sir.
Okay. This overall is different. This overall is different. This overall is different. Okay. Okay. There is no. Yeah, this overall is different. Means, overhauling the watch, overhauling the machine. Okay. Overhauling it is, but we don't pronounce it as hauling. Okay. It is overhauling. So this is not total. Overhauling means, servicing. It's kind of servicing.
So the first statement is false, sir.
First statement is false.
False.
This is false. Let's check whether it is right or wrong. Why it is false? Tirumale says,
Sir, because the expenses are only debited now, sir. Like it doesn't give income, right?
yeah. So overall expenses to put the second-hand machinery in working,
Condition two.
working condition. So this is, yeah, part of the cost of the asset purchase. Part of the asset. So therefore, it is not revenue. It is not revenue. You bought an old car, okay? You bought an old car and you make some modifications or repairs or overall, okay? Overall, service it. Okay, battery is gone, you fix the battery. Okay, gearbox wheels are worn out, you change those gearbox wheels, right? So this is all, what is that? It's overhauling, right? And this is not a revenue expenditure, but a capital expenditure, part of the cost of the asset. Next, who will take the next one? Money spent to reduce working capital, working expenses
True,
is
sir.
revenue expenses. Money spent to reduce working expenses is revenue expenditure.
True, sir.
True. Okay. Yeah. It is false for the reason it may be reasonably presumed that money spent for reducing revenue expenditure would have generated long-term benefits to the entity. Excuse me. It is long-term now. Once you incur that expenditure, the benefit is not for 12 months. It is for so many years, not for months. So therefore, it is capital. Okay. Next, legal fee to acquire property is called capital expenditure. Legal fee to acquire property.
So what is legal fees, sir?
The law, when you're, let's say, importing machine from, let's say this no machine, assume we have to import the COVID test equipment from China or Germany. So to import those machines, you may have to pay some excise duty and have to pay some fee to the government of India so that they allow you, they verify and allow you to buy that. That's legal expenditure, right? So what is this legal expenditure? Capital expenditure. Is this correct or false? It is. It is true. Read it. Legal fee is paid to acquire the property, which is part of the cost of the property, and it is incurred to possess the ownership right of the property. Therefore, it is capital expenditure. Therefore, it is capital expenditure. Next, who will take up the next? I'm just asking you to volunteer. Okay, shall I take the names? Shall I take the names? Okay. Shoaib, are you there? Shoaib. Prem is not speaking today. Nandasai is not speaking.
Sir, can I answer the fourth one?
You can answer, but it is good that we give chance to others also. Otherwise, they'll be hurt.
Okay, sir.
Yeah, Safwan, Muhammad Safwan. At times he is very vibrant. At times he is silent. Safwan, Muhammad Safwan. Okay, Praneet Reddy. Okay, Pranay. Okay. Uh, amount spent as lawyer's fee to defend a suit claiming that the firm's factory site belonged to the plaintiff's land is capital expenditure. Okay, who is plaintiff? Who is plaintiff? In a lawsuit, there are
One
two.
who complains, sir.
There are
The
two
law.
parties. Plaintiff is a complainant, and defendant is the one who is defending on the complaint. Okay, the person who has to respond is the defendant. Okay, and plaintiff is the one who is complaining. Okay, so amount spent as lawyer's fee, that's a legal fee to defend a suit. Okay, to defend a suit that the firm's factory site belonged to the plaintiff's land is capital expenditure. True? Shoaib said true. Fourth. Okay.
Also,
Fourth.
These
Yeah.
are false.
Legal expenses incurred to defend a suit claiming that the firm's factory site belonged to the plaintiff's plaintiff is maintenance expenditure of the asset. The asset is land here. It is not machine. So to maintain this is already acquired. This asset is already acquired long back. Somebody filed a case. You bought it from their parents, and the children of the one from whom you bought started filing suit. Okay, they said this land belongs to us, right? Now, but for example, if you're incurring the same expenses, the agreement expenses, the sub-registrar registration fee expenses, if you look at all those expenses, they are at the time of procuring the land or the property. They are all capital expenses. But now the land is already there in the books of company, and there's a company erected on that land, right? So this is just to maintain the property you're spending. Therefore, it is revenue in nature, right? So it is neither any durable benefit, there's any durable benefit for this, and there's no future for this expense. So therefore, claiming that it is a capital expenditure is false. Next, good attempt. Look at this, Ma. It is good that you commit mistakes. The more you commit mistakes, the more you are learning. Remember that. Okay? Those who have never committed mistakes, they have never done anything. They have not attempted to do anything. Therefore, they have never committed mistakes. Okay. Next. Next point, who will take up the next point? We'll quickly have to finish in 3 minutes. Next point. Okay. Rajat, will you take up the next point?
Yes, sir.
Yeah.
Sir, amount spent for replacement.
Can you be a little louder, Rajat? Okay. We are here to encourage you.
Amount spent for replacement of worn out part of machine is capital expenditure. Sir, false.
Amount spent for replacement of worn out part of the machine is capital expenditure.
Sir, false.
Huh?
Sir, false.
False. Okay. Capital 5. Number 5. Number 5. Okay. It is false for the reason that the amount spent for replacement of any worn out part is revenue expenditure since it is for maintenance. Since it is for maintaining the assets, not to improvise the productivity of the asset. Okay. Good, Rajat. A good attempt. Very good attempt, in fact. Next. Maheshwar is not seen here. Yeah, he's visible here. He is not audible. Maheshwar is visible here, but not audible. Yes, sir. Praneet, ready? Okay. Praneet, ready? We'll remove them. It's for a long time.
Hello.
Yeah. Tell me.
So am I audible?
Very much.
So Meerasgar here.
Tell me.
So can I give the answer of sixth one?
Yeah, please take up.
Sir, expenses incurred on the repair and whitewashing for the first time on purchases of the old building and revenue expenses. Sir, it's false, sir.
It's false. Okay. Expenses incurred on the repairs and whitewashing for the first time on purchase of the old building is a revenue expenditure. Let's look at this. Let's look at this. Sixth one. Yeah, it is false. So we'll close it here because we have to catch up with the next class and we'll continue in the next class.